In developed countries where the liabilities are in their own currency, it's almost always the devaluation option, which and I consider that a default as well. Basically, if you massively devalue bondholders on a purchasing power basis, then that's a type of default. And basically, when you kind of we've gone through this cycle, we keep building up private sector debt. Then it gets so bad that they transfer a lot of it to the public sector. They kind of have this kind of rotation that happens.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Lyn Alden breaks down where Bitcoin's heading next and what's driving it. Let's dive in and learn more together.
I mean, it's all in the public sector. There's really nowhere else for it to go other than default. And if you're an emerging market, you often default nominally because you just can't acquire the dollars that you pay back, much like a private corporation. Whereas if you're the United States government, you print the difference. And depending on the level of productivity, that will affect how much bondholders even realize that. Because, for example, during the 1950s, 60s period, bondholders weren't exactly complaining, and yet they were underperforming basically anything else. So stock market was going up. Most other asset prices were going up. Bondholders and currency holders were the bag holders. Whereas in the 70s or in the past 5 years, when you have more productivity challenges, the bondholders feel it more. And so it's not basically if there's bad productivity, the bondholders can underperform even basic goods like energy prices, for example. If there's really good productivity, they'll still massively underperform like high quality financial assets that have scarcity to them. Things like gold, Bitcoin, art, best high quality real estate. It still kind of underperforms the things that we're not getting more productive in making, because there's that big spectrum in terms of things that are actually scarce versus things like electronics or textiles or whatever the case may be that we're getting radically more productive in making over time.
Ethereum is heating up again, climbing to a 15-week high of $2,827 on June 10, sparking renewed excitement across the crypto world. After weeks of consolidation between $2,300 and $2,800, this breakout has traders wondering if a move above $3,000 is finally on the horizon. One Ethereum whale certainly thinks so, cashing in on the rally by securing $31 million in profit from two massive trades over the past 44 days. The most recent was a 30,000 Ethereum sale for $82.76 million, riding the price wave to perfection. At the same time, Ethereum's network activity is booming. Unique wallet addresses surged 70% in Q2, reaching a record 17.4 million. The base network is leading this growth, with Ethereum's mainnet still maintaining strong engagement. Ethereum continues to dominate DeFi too, holding 61% of the sector's total value locked, or around $66 billion. However, low network fees, just $43.3 million in the last 30 days, are raising some concerns about sustainability and staker returns. What's really catching attention now is the $40 billion in Ethereum futures open interest, the highest ever. If Ethereum crosses $2,900, nearly $1.8 billion in short positions could get liquidated, potentially pushing prices higher. But the market remains volatile, and traders are watching closely to see which way the next big move will go.
Yeah, a lot of these things are happening together, which is why it's so persistent. It's a really big Gordian knot, and that's why I keep fading any attempts that they're gonna, claiming that they're gonna get back on track. I mean, earlier this year and kind of late last year after the election, there was this big idea that Doge and Elon Musk are gonna get this back on track, and I was just looking at the math that's saying it's almost impossible. There's very little that they're going to be able to tackle that will actually get this back on track. So one, demographics. Basically, for decades, the baby boomer generation, which is very big, was paying into the system. And now that they're effectively retired and increasingly retired as the years go on, as even the youngest baby boomers start to retire, they're now in big drawdown mode. And so over the next 10 years, the existing $3 trillion in the Social Security Trust, which is held by intra-government debt. It's kind of the wonky accounting that they do, but that's going to basically pour back into the economy and transfer to external debt. And that's spendable income that enters the broader circulating economy. Then there's the interest expense. So for, like you said, for 40 years, we had rising debt to GDP, but falling interest rates. And right around the same time, the demographics started to roll over. We hit zero interest rates, bounced off zero. And now we have rising debt to GDP, but no longer declining interest rates. So you don't even have to assume that interest rates are going to go up. If they just kind of chop around sideways for the foreseeable future, interest expense starts becoming a very meaningful percent. It just passed defense. It's now like the biggest component after Social Security. And if it keeps going, it'll eventually pass even Social Security. Defense spending as a percentage of GDP was falling for a while as we kind of exited the Cold War. But a lot of things, the kind of theme is things don't have to ramp up rapidly. Just if you have a mild trend change, that can really matter. So if you go from shrinking military spending as a percentage of GDP just like flat or mildly up, that's a trend change. That really makes a difference in some of these marginal numbers. U.S. has the highest healthcare costs in the world on a per capita basis, and so that's a whole topic in and of itself that's very hard to unravel. So people often point to Japan, but Japan, despite being on average 10 years older, has much lower healthcare costs per capita. They live longer. A lot of factors there. But the United States has, the other part of retirement spending besides Social Security is the whole Medicare spending and the broader healthcare industry. And so basically for 10 plus years, basically any sort of investment horizon that anyone can plan around, the deficits are virtually unassailable. And then the punchline, which I didn't get to at the conference, but I've written to before because it's a somewhat of a longer topic, is that compared to many other developed countries, like let's say Germany or Canada or whatever, the United States' tax receipts are more closely tied to its stock market performance. That's partially due to the fact that we're a global kind of hub for equity capital, that the whole world wants to invest in our equities. It's partially because we have higher wealth concentration than many other developed countries. And it's partially because of our nuances of our tax code. And so basically if they actually do a pretty good attempt at austerity, when you kind of fast forward 12 months or so, it'll be like a recursive thing where now their tax receipts are suffering because of the way they structured things. And so nothing short of a kind of complete overhaul would even get close to tackling this. And there's nothing on the cards for that politically.
Michael Saylor is doubling down on his bold Bitcoin outlook, brushing off fears of another crypto winter and predicting an explosive rise to $1 million per coin. In a recent interview with Bloomberg, Saylor confidently declared, "Winter is not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. His reasoning: a powerful combination of growing institutional adoption and the fixed, limited supply of Bitcoin. Saylor pointed out that only about 450 Bitcoin are mined and sold daily, worth roughly $50 million at current prices. If just that amount is bought each day, he argues, prices will be forced to rise. His firm, Strategy, now holds an eye-popping 582,000 BTC worth around $63.85 billion, making them one of the largest institutional holders in the world. He'd also emphasized a shift in political and financial sentiment. With former President Donald Trump voicing support for Bitcoin and traditional financial giants like BlackRock entering the space, Saylor believes the groundwork is set for a major price surge. He even noted that nation-states like Pakistan are stepping in, creating their own strategic Bitcoin reserves. While Saylor admits Bitcoin could see sharp corrections on the way up, he's clear: the long-term path points skyward. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.